Blockchain Daily News, February 21st, 2024. The latest blockchain policies of South Korea, the United Kingdom, and Japan. Wall Street's latest investment report shows Bitcoin is eroding gold's dominance. South Korea considers lifting bans on spot Bitcoin ETFs, institutional investment in cryptocurrencies, and initial exchange offerings. South Korea's ruling party is considering allowing the issuance of spot Bitcoin ETFs in an election pledge. The UK government plans to have lawmakers approve new rules governing stablecoins and crypto asset staking services within the next 6 months, as pressure mounts to come up with concrete proposals ahead of the upcoming general election. British Finance Minister Bim Athalami said in a speech today that the government is vigorously promoting the legislation. "We are very clear that we want to get these things done as quickly as possible. I think within the next 6 months, these things are feasible," he said. The UK Treasury first pledged in October that it would provide more clarity on the specific sector of cryptocurrencies sometime in 2024, but that it would include broader proposals to include crypto exchanges and other industry providers in existing financial services rules. Still up in the air, when asked whether the guidance might also become legislation this year, Athalami said he could not provide a timeline. Japan plans to allow investment funds to hold cryptocurrencies, further opening up to digital assets. Japan is moving closer to allowing venture capital firms and other investment funds to hold digital assets directly after Prime Minister Fumio Kishida's government agreed to submit a revised bill to implement the change. According to a statement published on the website of Japan's Ministry of Economy, Trade and Industry, Kishida Fumio's cabinet approved the text of a bill on February 16 to partially amend the country's industrial competitiveness strengthening law. The bill states, measures will be taken to add crypto assets to the list of assets that can be acquired and held by investment limited partnerships. The investment limited partnership here refers to the vehicle used by venture capital firms to secure investment capital. The Japanese government now plans to submit the bill to the current Diet for discussion. Bitcoin is eating away at gold. As we all know, since the US SEC approved the Bitcoin spot ETF to land on the US stock market, it has opened the door for the flood of liquidity in the US financial market to flow into Bitcoin. In just 30 trading days, the Bitcoin ETF expanded from zero to nearly $40 billion, surpassing the size of the silver ETF by about $10 billion, and temporarily formed the gold ETF with a size of about $90 billion. A pattern of 30 to 70 was formed. The massive injection of US dollar liquidity has allowed the price of Bitcoin to remain at 52K. The Bitcoin spot ETF has thus become the fastest growing ETF in Wall Street history. So, where does the liquidity flowing into Bitcoin ETFs come from? Data shows that it is likely that half of this comes from the loss of liquidity in gold ETFs. As can be seen from the figure, since the listing of the Bitcoin spot ETF in January, the cumulative net inflow of the 10 Bitcoin ETFs has reached approximately $4 billion. During the same period, 14 leading gold ETFs lost more than $2 billion in liquidity. Of course, if you extend your horizons to 2023 and widen it to related ETFs around the world, you can see that the accelerated outflow of gold ETFs has been unstoppable from mid-2023. This hard fact undoubtedly confirms a statement we have repeated many times: Bitcoin is a better gold. The whole process of monetizing a commodity, will probably go through several stages. 1. Collectibles. 2. Speculative goods. 3. Hedging of value, SOV, storage of value. 4. Trading medium, MO, media of exchange. 5. Pricing unit. It has taken thousands of years for gold to complete the above process. The monetization of Bitcoin may be the greatest monetization process that our generation will be able to witness in our lifetime, maybe not long enough to complete the process. In the past 10 years, Bitcoin has gone through the first 2 stages, driven by idealists and fanatical speculators, respectively. Starting from the first half of 2019, Bitcoin has officially entered the 3rd stage. Obviously, although it has been predicted many times that Bitcoin's ultimate mission may be to defeat the US dollar, before that, or in other words, at the current stage, its historical mission is to first defeat and surpass gold. There is no other reason than the objective laws of the monetization process mentioned above. Bitcoin must first defeat stocks at the level of speculative goods, and then beat gold at the level of value storage before it can move to the next stage and challenge the US dollar's global status as the king of currencies as a medium of exchange and unit of account. Currently, Bitcoin has just crossed the $1 trillion mark in total market capitalization. The total global market value of gold is nearly 14 trillion US dollars. Looking back at 2023 today, it basically confirms the original judgment. The unexpected early approval of the Bitcoin spot ETF in early 2024 brought a surge of incremental funds to Bitcoin. Bitcoin lived up to expectations and quickly launched an attack on gold, which stood in the same ecological niche, quickly eroding the latter's market, proving that it is indeed the better gold and better store of value, SOV, in everyone's mind. BlackRock, a financial upstart, also used Bitcoin ETFs to quietly challenge JP Morgan, the global gold trader. Bitcoin versus gold, new money versus old money. The charge to launch a general attack on gold has sounded. When the trumpet sounds, it will reach a new height.